Snap Finance provides financing options for people to purchase goods and services. It focuses on consumers with poor credit history. Snap Finance operates as a lease-to-own company. Customers can make payments over time and eventually own the item. Snap Finance partners with various merchants across different industries. The goal is to make it easier for people to get what they need, even with poor credit. Approval is based on factors beyond credit score, like income and employment history. Snap Finance offers flexible payment options and a streamlined application process. Snap Finance specializes in providing lease-to-own financing solutions. This service allows customers to obtain goods and services without needing upfront payment or a traditional loan. Customers make regular payments over a set period, typically 12 months. One of the key features of Snap Finance's services is its fast and easy application process. Customers can apply for financing online or in-store at participating merchants. The application process is designed to be straightforward, requiring minimal paperwork and often providing instant decisions. Snap Finance offers flexible payment options to accommodate different financial situations. Customers can choose their payment frequency, such as weekly, bi-weekly, or monthly installments. This flexibility allows customers to align their payments with their income and better manage their budgets. In addition to lease-to-own financing, Snap Finance also offers promotional periods with reduced or no interest. These promotions can make purchases more affordable for customers, especially for larger ticket items. Snap Finance has built a vast network of merchant partners spanning various industries. These partnerships are crucial to Snap Finance's business model, as they allow the company to reach a broader customer base. Snap Finance partners with both national retailers and local businesses. Some of the key industries where Snap Finance has a significant presence include furniture and appliance stores, electronics and technology retailers, tire and auto repair shops, and jewelry stores. This diverse range of partners ensures that Snap Finance can cater to diverse customer needs and preferences. Snap Finance actively seeks out partnerships with merchants who share their commitment to customer satisfaction and financial inclusion. They provide their partners with the tools and resources to integrate Snap Finance's financing options seamlessly into their existing point-of-sale systems. By collaborating with a wide array of merchants, Snap Finance expands its reach and makes its services accessible to a broader customer base. These partnerships are mutually beneficial, as they drive sales for merchants while providing customers with flexible financing options. Snap Finance, f.i.r.e, and Klarna are key players in consumer financing, offering alternatives to traditional credit. They differ in target audience, services, and business models. Snap Finance serves consumers with subprime credit. f.i.r.e and Klarna target a broader customer base with good credit. Snap Finance operates as lease-to-own, while f.i.r.e and Klarna offer installment loans. Each company plays a distinct role in consumer credit. Snap Finance, public or private? Snap Finance is a privately held company. This means that its shares are not traded on any public stock exchange. As a private company, Snap Finance is not required to disclose its financial information to the public in the same way that publicly traded companies are. Being a private company provides Snap Finance with certain advantages. It allows them to operate with more flexibility and make decisions without the same level of public scrutiny as public companies. They are not subject to the same level of regulatory oversight and reporting requirements. However, being a private company also has its limitations. Snap Finance cannot raise capital from the public markets by issuing stock. This limits their access to funding compared to publicly traded companies. Despite not being publicly traded, Snap Finance's performance and financial health are still of interest to investors and industry analysts. They track the company's growth, partnerships, and overall market presence to assess its potential for future success. The potential benefits of investing in Snap Finance. Snap Finance isn't publicly traded, but let's consider its potential if it were. Investors seek companies with strong growth potential and solid business models. Snap Finance focuses on a niche market. Catering to subprime credit consumers taps into an underserved market. This specialization can lead to higher profitability. Snap Finance has an extensive network of merchant partners. Partnerships provide access to a large customer base. Expanding the partner network increases reach and revenue. Snap Finance operates in a growing market. Demand for alternative financing solutions is rising. Potential risks of investing in Snap Finance. Investing in Snap Finance could present benefits, but potential investors should consider the risks. There are no guarantees of returns and potential for losses. The subprime lending market is inherently volatile. Poor credit scores increase the risk of defaults, impacting profitability. Economic downturns could further increase defaults. Snap Finance faces competition from banks and fintech companies. Regulatory scrutiny and changing laws could affect operations and profitability. Snap Finance's impact on consumers. Snap Finance significantly impacts the lives of consumers, particularly those with limited access to traditional credit options. By providing alternative financing solutions, Snap Finance enables individuals to purchase essential goods and services they might not otherwise be able to afford. For consumers with poor credit history, Snap Finance offers a chance to build or rebuild their credit. Making timely payments on a lease-to-own agreement can help establish a positive payment history, which is crucial for improving credit scores over time. However, it's essential to acknowledge the potential drawbacks of using Snap Finance's services. The total cost of purchasing through a lease-to-own agreement can be significantly higher than the upfront retail price due to interest and fees. Consumers must carefully consider the terms and conditions of any financing agreement with Snap Finance, ensuring they understand the payment schedule, interest rates, and any potential penalties for late payments. They should explore alternative financing options and compare costs before committing to a lease-to-own agreement. Snap Finance's impact on businesses. Snap Finance's services extend beyond individual consumers to impact businesses as well. By partnering with merchants, Snap Finance provides valuable tools and resources that can help drive sales and attract new customers. Offering lease-to-own financing options can be particularly beneficial for businesses selling big-ticket items such as furniture, appliances, or electronics. It allows them to tap into a customer base that may not have the upfront cash or creditworthiness for these purchases, expanding their potential market reach. Moreover, Snap Finance's streamlined application and approval process can lead to quicker sales transactions and reduced cart abandonment rates. When customers can easily access financing options, they are more likely to follow through with their purchases, increasing sales conversion rates for businesses. However, businesses should also carefully consider the costs associated with partnering with Snap Finance. These costs might include transaction fees, integration expenses, or potential losses due to customer defaults. The future of Snap Finance. The consumer finance landscape constantly evolves, with technological advancements and changing consumer preferences shaping the industry's trajectory. As a key player in this space, Snap Finance's future will likely involve adapting to these trends and innovating to remain competitive. One potential area of focus for Snap Finance is enhancing its digital platform and mobile experience. As more consumers embrace online and mobile banking, providing a seamless and user-friendly digital experience will be crucial for attracting and retaining customers. Another area of potential growth is expanding into new markets and product offerings. Snap Finance could explore partnerships with businesses in other industries or develop new financing solutions that cater to evolving consumer demands. Furthermore, data analytics and artificial intelligence will likely play a significant role in Snap Finance's future. By leveraging data to improve risk assessment models, personalize marketing efforts, and enhance customer service, Snap Finance can gain a competitive edge in the market. Snap Finance in the evolving fintech landscape. All in all, Snap Finance has carved out a niche in the consumer finance industry by providing alternative financing solutions to underserved consumers. Its focus on lease-to-own agreements and partnerships with various merchants has enabled the company to reach a broad customer base and experience significant growth. As the fintech landscape continues to evolve, Snap Finance faces both opportunities and challenges. Embracing technological advancements, expanding into new markets, and adapting to changing consumer preferences will be crucial for the company's continued success. While Snap Finance's services can provide valuable financial access to consumers who might not qualify for traditional credit, it's essential for consumers to carefully consider the terms and potential costs associated with lease-to-own agreements. Transparency, responsible lending practices, and a commitment to customer education will be paramount for Snap Finance to navigate the evolving regulatory and competitive landscape successfully.